Hi, this is Steve Westmark, Counselor Realty. Thanks so much for watching my video blog this week. Well, the March numbers are in for the regional MLS, and I'm going to go through three separate areas to talk about what's going on and the changes in our marketplace. The first one is a graph that shows the pending sales. And you can see going back from 2011 up to 12 and 13, both in March, where we had a 16% increase in 2012 in the pending sales, and this year we're up again by another 6.6%. And the next graph adjacent to it shows what's happened over the first quarter of this year, that back in 2011 we had 9,000 sales, and this year we're up over 11,000 sales. The next area I want to show you is what's going on in pricing, and there's three different ways to look at price. One is the area of median sale price, and so I'm going to show you the median sale price graph, and you'll see for March of 2011 we're at 140,000. Now that means that half the sales in the Twin Cities were under 140 and half were over 140. Then in 2012 it went to 149.9, and this year we've seen a 17% jump in March to 176,000. The next graph shows what's going on with the average sale price, and you can apply the same type of thing, but all that does is takes all the sales, divides it by the number of the total volume to give the average sale price. So you can see back in 2011 we were at 183,000, we moved to 191,000 in 2012, and this year we're at 215,000. The last graph dealing with price is cost per square foot. And I think that that's a really good chart to look at because it takes the median price and the average price all out of it, and it kind of just gives you a real good idea of what's going on in dollar per square foot in the Twin Cities. And I think that gives a better idea of where values are going. So you can see back in 2011 in March we were at $89 a foot. Then in 2012 we were at $93 a foot, and now we're at $105 a square foot. Now as you follow different things, some builders go out and build houses and they're over $200 a foot, but then you can find houses that are run down and in poor condition that sell at $50 a foot. Once again, this is just an average, but it gives you a real good idea of trend of what's going on in pricing. The last area I want to talk to you about is inventory of homes. And I'm going to help you segment and understand a little bit more about inventory. Now the first chart shows what's gone on with the inventory in the Twin Cities. And it's been very amazing over the last 2 years. In March of 2011, we were at 23,400 houses on the market. Then we dropped to 18,000 last year, and this year we're in the 12,000s. In the worst real estate markets that we had back in 2007 and 2008, we had at this point in time over 35,000 houses on the market. So our inventory has shrunk significantly, and so you hear from people today that our inventories are very, very low. Well, I'm going to show you in the next chart a breakdown of what has happened in the inventories by price range. This chart is the month supply of inventory by pricing, by looking at 120,000 and below, 120,000 to 150,000, and you can see that it goes all the way up to $1 million plus homes. So at the $1 million plus homes, there's about a 16-month inventory, where if you're looking at homes under 120,000 in the Twin Cities, we're at a 2-month inventory. Many times I said in the past that if we have a 4-month supply or less, you're in a seller's market. If you're in a 4 to 6 month supply, you're in a balanced market, and as you're as a 6-month or more supply, you're more in a buyer's market. So many times when you're looking at things going on in the marketplace, you need to realize the price range you're looking or the area that you're looking to determine what is my supply and how active is it. The next thing I want to show you is a breakup of supply of another way. And this shows the supply of months of inventory of the types of homes, whether it be a traditional sale, that seller that just puts their home on the market, or builder that puts their home on the market for sale. And then you'll see the lender owned, and then you'll see short sales. Short sales are those types where the owner is upside down, owes more against the house, and is hoping that the bank is going to agree to forgive the difference in the debt. Well, you can see what's happened in the supplies. The traditional sales have dropped significantly from an eight-month supply back in 2011 to 3.3. But the real interesting thing is when you look at the lender-owned sales, they used to be at a 4-month supply, which was at the edge of a balanced market, to now where it's less than 1.6 months of inventory. And so our lender-owned properties are selling very, very quickly because of the low inventory. And then the last chart I'm going to show you is how the inventory has changed. It shows the numbers of properties. It still shows you that we have 8,700 properties that are on the market that are traditional, but we have less lender-owned at only 1,700. And with over 4,000 to 5,000 houses selling a month, if everybody decided they just wanted to buy a bank-owned property, they'd be gone in less than 2 weeks. So our marketplace is firming up, our inventories are changing, we're getting back more to a better marketplace. We're still a ways away from where we were back in 2003 and 4, but it's gotten significantly better. Well, thanks for watching my video blog this week. Make it a great day. Thanks.